Central banks panicking, Iran looking for a war, and a mysterious suicide. What's up, everybody? Welcome aboard. It's Bubba's Bottom Line. It is Sunday, August the 11th, and time is flying by, and what a wild week in the markets last week, and we'll, of course, talk about that a little bit later. But it was crazy. But, of course, I guess the overall news item is the mysterious suicide by Jeffrey Epstein. Again, the guy who was, I guess we could call him like, a pedophile, whatever he was. I mean, obviously, he deserves to be gone. But it would have been nice to see that he didn't get out in the first place back in 2004, and it would be nice that if he had to face the people whose lives he ruined. But the suicide, awfully mysterious. It kind of reminds us of some other mysterious deaths throughout history. It would be hard for me to believe that this wasn't somebody with a lot of power that somehow got this done. Again, I'm not accusing, just in my opinion, from what I could see, it seems awfully strange that suddenly this jagoff could end up dead. Okay. But of course, he probably had just a little bit too much knowledge and probably could cause a little bit too much trouble for some very powerful people. So obviously he ended up mysteriously committing suicide. But in the meantime, the real big stories of the business week were the central banks around the globe having an all-out panic as rates continue to fall everywhere, and negative rates here and negative rates there. And Finland dropped by 50 basis points, and this place dropped by 25. And you can't get the money out fast enough, but the funny thing is you can't get the money. So the rates go down, and there's no lending. But again, there's now talk that you can buy a home, and I think Denmark it is, for a minus rate, so they'll actually pay you to borrow the money. It just shows you how, first of all, clueless the central banking system is, okay, and how ridiculous their whole notion is. I mean, you really only have to look. I mean, you can go back 106 years and look at the destruction of the dollar over 106 years. You can look at what they've done and basically how they've taken the money right out of your pocket, okay, as we go forward. You can look at all the violations in the original mandate for the Fed, okay. How we get away with this, I'll never know, but I can only ask the question, okay. But based on what they're supposed to be doing, they do none of that. They do kind of what they want. And it's, again, as I've said before, every president since 1913 has been at the Federal Reserve to keep rates low. And of course, they think that that's going to stimulate spending and money. And of course, it has not worked. And again, if you want the perfect model, you just have to look at Japan, since they started almost 30 years ago with this same ignorant process. Okay. But of course, we know that the whole fiat currency system, the whole central banking system, is not designed to help the average middle class person. It is designed to cause more destruction. It's designed to take dollars away. And as we can see, as the world pushes through to more digital currency, okay, and I'm not talking about the cryptos yet, but as we shift through to more digital currency, taking the money, it's almost like they're trying to create a Las Vegas environment where when you're spending money, you don't really know what you're spending because you do it off your phone. You use one of these pay services, Venmo, Paytm in India, all these different pay services. So again, but I personally believe, okay, that that's going to be good for the crypto world. I think that people that have any understanding at all are sick and tired of seeing what the Federal Reserve can do and what the central banks can do, and by the destruction they can create, versus letting a free market system work. It is truly amazing, especially with rates this low. But who can borrow money? You still can't get money from the bank, okay? Because of good. And I don't blame the bank in this case because again, it's a profit rate. Their spread between what they borrow for and what they lend for is not big enough. So but it just goes to show you the ignorance of everybody involved in this, except the bankers, because the bankers will buy a lot of bad loans, which we've talked about for the last couple of weeks, and they'll be in great debt. And when this whole system blows up, which it will, because you do have an unbelievable bond bubble here, but when it does blow up, well, the Fed will be there to bail them out again. And isn't that amazing? So it's nice to be in a business where you can multiply your earnings by a billion. We won't get carried away. We multiply your earnings by a lot, okay, and never really have any risk. I mean, isn't that a great business model? Lend out, collect the interest, up or bust. Okay, well, here comes the Fed. We'll write you a check. Isn't that a great? What a wonderful system. Why isn't every business like that? Of course, if every business is like that, AOC might be championing it. But in the meantime, it's obviously apparent that the true free market system is not available in any place except for one. The only true free market system is a flea market, okay, or the cryptocurrencies right now. That is the only true free market that works on price discovery and so on. And again, it does not have the manipulation of others. But again, it's just one man's opinion, okay? But it does look like Iran is looking for a war right now. They're threatening Israel. Smoke will rise in Tel Aviv was the headline, okay? And of course, Iran started with taking the British ship in the Straits of Hormuz, and we saw some move up in oil. And of course, now they're going after Israel, and I think they're looking for a war. And obviously they could be swatted off like a bug, and hopefully they will be. But again, I think when you bark after Israel, you might be going in the wrong direction. I don't know that Israel will have as much restraint as others do, obviously because of where they are. So when you look at it, but it certainly looks like they're trying to pick a fight. Okay, I mean, again, you just don't do these things of ignorance and expect nothing to happen from that. But again, I think when you look at it here, does the average investor realize the exposure that they're under here in these market conditions? Again, bond bubbles. It's. I've never seen bonds act like this. Okay, I've been doing this for 40 years. Okay, I've seen action. Okay, but it's amazing when you see what's going on here. And of course, you saw, I think it was last Wednesday, rates dipped down to 1.6 in the 10-year. Okay, but in the meantime, you can get on 30-day bills, you can get 2%. Okay, so obviously the inversion of the yield curve, which everybody poo-poos. We're back in that stage where it doesn't matter if you make money or not. Okay, that's the interesting thing we have. This is where we talk about market patterns repeat and things repeat. And right now we're in that stage. It doesn't matter. You don't have to make money anymore. Uber reported earnings. Okay. Now, again, they lost money. We knew they were going to lose money. Lyft reported. I don't know how they're ever going to make money. Now, I'm not saying they can't because I don't know, but I certainly don't know how they'll ever get there. But in the meantime, they certainly did not move. The pundits made a big deal. Oh, Uber's moving 7%, okay, or 8%. Well, just so you know, the markets had already priced in a 10% move in either direction. Okay, so again, we're once again. Well, I'm not, but analysts and the schmucks out there are saying, well, they've got so many views, they've got so many riders. It doesn't matter how many clicks, how many views, how many riders. What it matters is how are you going to make money? Because at the end of the day, it comes down to profits. It comes down to the balance sheet. Okay. Again, I can't say they won't make money. I don't know. But right now, they're not making money, and they're certainly extremely well overvalued. But again, of course, many of the things are. So when you look at the average investor who's invested in, like a Beyond Meats, again, I don't have any problem with it. A Roku, which I own, full disclosure. Okay. But Roku's at about a 20,000 negative PE. I mean, it's obviously some ridiculous number. Okay, you got to make money somewhere. You have to make money. Okay, now I can actually see where Roku can make money, because to me, there is basically a service business that collects money on a monthly basis or whatever. Okay, so I see them potentially making money, but again, they don't have the same expenses as an Uber or Lyft. But again, I'm just saying, the bottom line is the average investor is at enormous risk in these markets right now. Okay, because they're flying in and flocking in to all this stuff. Just, again, earnings are going to be good. Well, again, you keep redoing to the bar, earnings are going to always be good. Okay, but you've got too many excuse makers already built in. And again, the markets are telling you that they may go higher and they may make new highs. Okay, we're back long again. Okay, we were short, we get back long again on Friday. Okay, so again, I hope they go up. But I don't like it. I think they got more room to go on the downside. I think the market really wants to turn over here, which again we'll talk about more on this in the market commentary. But I think the average investor who's listening to, well, the stock market dividend is X, it's bigger than the 10-year Treasury. That's true, except in the 10-year Treasury you don't have the market risk. Okay, you do have market risk in the stock market. Now, again, if your time horizon is 20 years, pour it in the stock market. If your time horizon is 10 years, you better really be a little bit more careful. Again, the whole thing, markets, I am the biggest believer in the equity markets. Okay, and I am always 100% invested because I hedge. Okay, but at the end of the day, you have to know how to protect what you're in with, or how to put yourself in the best position, or you're going to be out of business and out of money. Okay. And I think that is something that the average investor doesn't look, nor does the average advisor who advises the investor, because again, the advisor gets paid on having your money in the market, not in cash. Okay. So I hope everybody either figures out how to get hedged so that you can stay in the market, or converts their stuff into some cash, because there is going to, and again, I don't know when it's going to be, but there will be. And again, it's all about your time horizon. In the meantime, my time horizon, this is Bubba's Bottom Line. We're going to step it out here for a break, and we'll be right back with more of Bubba's Bottom Line after the break. What's up, everybody? Hey, doing a webinar Saturday on the equity portfolios. We had a little bit of a rough week last week, but still doing fine. I can't complain. But again, as we always warn you and tell you, in trading, there's going to be some drawdowns anyways. So not a concern, but you'll get to see how the model works. It'll be Saturday at noon. You can email me for the link, or it will be posted on the website by Tuesday. But it's Saturday at noon, Equity Portfolio Management. Check it out. You'll have a good time, and I think you'll teach yourself how to make some money and learn how to understand what's going on and actually leverage up stock with very limited risk. In the meantime, also don't forget our high school investing program at Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Now let's get back to Bubba's Bottom Line with me, Todd Bubba Horowitz. Welcome back. It is Todd Bubba Horowitz. It is Sunday, August the 11th. It is Bubba's Bottom Line, and what a crazy market week. Whew, man, oh man. As they opened up Sunday, Monday, okay, they got clobbered. They got hammered. Okay. Now, Bubba Daily Update subscribers, we're fully prepared for everything that happened, because we kept saying once that we saw that big sell-off on Monday, there's going to be a big rally in here somewhere. There's going to be a rally. I would not get too short. In fact, we had a lot of reversal signals. Okay, and told our equity people that, look, we're going to get short, but we're going to wait for a little bit of a bounce back. Because, again, remember, when markets stretch too far one way or the other, they're usually going to revert back to the mean. In the meantime, markets did come flying back. Monday, not so much, but Tuesday, after being down, they came all the way back. Wednesday, that's when central banks really went to town and lost their mind. And, of course, the Dow was down, 600 or 700 again. And by the end of the day, guess what? They were higher on the day. Amazingly so, they were once again higher. Now, that was not a hard call. We actually talked about that on the update, that they could certainly come out. Now, one of the things you look at was volume was very light last week. And again, we don't make any excuse for volume, because price determines action. But when light volume sets up for a great rip-your-face-off rally, which we saw. And of course, we saw that continue into Thursday. Okay. And then by Friday, it was, okay, we need to take off a little more pressure. And late Friday night, I would say late Friday was a heavy sell-off at the end of the day, like right within 20 minutes, 15 minutes of the bell. I would say to me, unless there's going to be some major news tonight before we get to the open, I would say too that was probably just some people that didn't want to go home long from the weekend, taking off some positions. And, again, it's thin, so it doesn't take much to push it down. I would think we might, again, I don't know what the last minute news might be. There could be a tweet, there could be who knows, right? But at the end of the day, we'll see. But I wouldn't be surprised if they were higher tomorrow. Okay. Now we are long. Okay. We were reversed in equities in everything but the Russell. And if the Russell would have been higher on Friday, we'd have reversed that too, but not. So we're basically long the Dow, long the S&P, long the NASDAQ, and short the Russell. But again, we'll see what goes on. And of course, oil almost got to our target of 50 last week as it crumbled down to, I think it was 50.52 or 50.82 was the low for the week. And then it came back late in the week. Of course, we did have some fear, as we talked about earlier, in the Straits of Hormuz. Now, again, there's no reason for WTI oil to trade off of fear. Okay, we have all our own. Okay, we're not dealing with the Straits of Hormuz for ourselves. But of course, again, remember, it's the emotional side of trading. So you have to be concerned. But again, you can see it. All you have to do is look at the oil pattern and look at the pricing from September, October, November, and you'll see that each subsequent month, prices get cheaper. That is called backwardation. That is called bearish. Okay, that tells you that this market's going to collapse. Okay, now again, I say we go into the 40s. Okay, not 40, but like 48, 49, and I wouldn't be surprised if it did it this week. Now we'll see. Again, it's still very thin, but that is something that is to keep an eye on. Okay, and we're still short oil. Gold, amazing. Okay, what an explosion it had. I think it was Wednesday, but it was funny. We thought and wrote for Kitco that we figured we'd hover around the 1500 level. Okay, and maybe consolidate. Sure enough, bang, 1530. I think at 15, whatever it was. And this is December futures. For all you who complain, I use the futures market. I use the active futures market with the prices I quote. So you can complain about something else, right? So you now know I'm using the futures market. Okay. So, anyways, we came down a little bit Thursday, Friday, and I think 1500 is now a buy. We are still long gold, but it does look like silver is getting ready to make a much bigger move. One of the things you look at is the gold ratio, the gold silver ratio, which is about 90-1 right now. Okay. It's supposed to be 15. We know it's never going to be there again, right? This goes back to the whole central bank crook work, right? The Fed thievery, all this stuff that goes on. So, but at the end of the day, it should be narrow, right? And it does look like, gold has made almost a 7-year high and silver has made a 1-year high. So again, I would expect to see silver start to move. Again, I'm always a fan. And again, I think that anybody in all portfolios should have some representation, but never buy gold or silver as a defense against your equity portfolio. You are making one of the biggest mistakes you will ever make because it does not protect your equity portfolio. Okay, I don't care what anybody says. That is a fact. Okay, you want to protect your equity portfolio? Learn how to hedge it with options. Then you don't have to worry about anything. Okay. In the meantime, the bond markets, they did explode. Now, they did come back late in the week, but still, yields at about, I think, 1.7, 1.75. Okay. 30s are down. But again, you've got the inversion. Now, everybody, again, doesn't want to pay attention to inversion. And I'm not saying you should worry. And please understand that we're long. I don't want the market to collapse, but I wouldn't be surprised if any day this sell-off doesn't start. Okay. The only thing I do know is that if it does start, we'll reverse. But what you have to focus on is that right now, price determines action. Bonds are going up. Interest rates are going down. That's it. It's as simple as that. Now, again, you know that I don't like the Fed, and they do a lot of things wrong. But in this particular case, they're trying to keep up because they want to keep the spread somewhat consistent between us and all the negative rates of the world. And I thought, if the markets were down again on Wednesday or Thursday, I thought and said, which is wrong so far, that the Fed might have to come in early before the next median cut. But they're definitely going to cut. Okay. This has got nothing to do with President Trump wanting to cut. This is really keeping up with the Joneses kind of view because they need to keep the spread low, because what's happening is obviously all money is starting to flow into the U.S. dollar, into the bonds here, and pushing yields down. And speaking of the bonds, you've got, China, our biggest debt holder. There's word out there that the way China's going to try to get even with the tariffs is to start to try to take in some of their cash, right? They're gonna take back their whatchamacallit. They're gonna weaken the treasury market. Well, you know what they don't realize, and of course they do realize, this is not, they're not dumb. They do realize it. They can't do that, right? Remember, we owe the money. When you're the big borrower, okay, you have all the power. And certainly we have the ability to devalue the currency. We have the ability to devalue the bond. So if they decide to play hardball, it'd be very similar to what the Hunt brothers did with silver. For those of you who don't know, a quick overview. The Hunt brothers tried to corner the silver market, and the Board of Trade went to them and said, look, you're screwing up the market. We cannot allow you to corner the market. We're going to give you X amount of dollars to walk away, give you a big profit, and go. Okay? And of course, the greed got to the Hunt brothers, and what they say? No, we're going to continue to do what we do. So what did the Board of Trade do? They said, okay, liquidation only. And of course, they lost all their money. Okay, so again, the U.S., when you're the big debtor, when you're the big owner, when you're the big creditor, when you owe the money, okay, when you owe the money, you're going to be the one that has more control. So China's not doing anything with trade. Don't buy into that bull, because that's exactly what it is. It's bull, okay? Because again, even if our rating goes up, does it really matter? Okay, so again, let's not get confused by the facts. Okay, the rumors are rumors, and the facts are facts. And the facts are China's not going to try to play that debt card, because they'll only end up getting punished themselves. And they've got enough trouble over there right now. They're trying to still manipulate the yuan. Okay, which is, again, they're trying to account for the tariffs in their prices. So we'll see how it plays out. In the meantime, the dollar was a little bit weaker last week. Again, the central banks, the Fed especially, wants to weaken the dollar. And of course, this is a currency war. Now, I know that President Trump called it a currency war. We've been in currency wars forever, since they went to the fiat currency system. Okay. So again, this has been a race to the bottom forever. I don't want to, we're just as guilty as manipulating currency. The only thing about China is they're obviously much more privately held, and the yuan doesn't free float against everybody else. So at the end of the day, all nations manipulate their currency. That's what they're doing with their interest rate and everything else. I mean, again, it's a crack. Okay. Grain markets, is it a problem? Is the trade wars a problem? Corn exports plunged. I don't know if they plunged. Again, I'm not that deep into it. We've got a USDA report tomorrow, which again is worthless. USDA and Fed are about in the same category. But again, corn prices are higher. Okay. They've been down the last couple weeks, but they're higher. Okay. Soybeans are a little bit higher, but they have pulled back a little bit. And wheat is a little bit higher, but it's come back. But again, we had these big runs up. We came back, but we're still higher. So is it the trade wars? Is it the tariffs? Or is it just that we have such an oversupply? I still go with the oversupply, because again, I think that if they need it, if there's a weather issue, then there's going to be, prices are going to go a lot higher. And although we are short right now, the grains, I think they're still going higher. But I wouldn't be surprised to see a pullback first. And that's what I'd be looking for to buy and reverse. Meats, cattle looks good. Okay. I mean, it didn't look good at the end of the week, but it held support, both fats and feeders. And, after Monday's debacle where it looked like they were going to flush them, kind of came back and kind of held up very nicely. Hogs look like they may be turning and may be going, and it may be time to be a buyer of hogs. We'll be watching closely and keep you posted, during the week. But again, I think, when you look at everything that's going on, okay, you've got the Fed, and I think this is almost, what's the word I'm looking for? This is almost kind of scheduled or planned, okay? You've got St. Louis Fed talking about, well, maybe we don't need to lower interest rates. So it's kind of like they used to have Lael Brainard come out and test the waters of what a rate cut would do and how the markets would react. I think this is kind of floating the information. It's almost like they scripted what they want to do to try to see how the market's going to react. To me, the Fed is absolutely worthless. Okay, if it was my decision in 2008, I'd let the banks go broke. Okay, the ones that had troubles, and I would just reimbursed with the $4 trillion they made. I would just I would have just paid back the depositors. But again, that's just me. Okay. In the meantime, Bitcoin got nicely higher again. I think that this whole digital currency theory that they're trying to get to by eliminating the paper money is going to be a much bigger benefit for the cryptos in the long run as well. We'll see how it looks like. We're going to step out of a break and come back with my commentary after the break. This is Bubba's Bottom Line. Todd Horowitz. We'll be right back. So, everyone, markets are wild, and we've got some great products for you to check out. Again, we've got our equity portfolio. We're doing a live webinar on Saturday at noon Eastern. You want to check it out? All you got to do is email me at bubba@bubbatrading.com or go to the website at bubbatrading.com. And again, we've got the micro futures, which are doing unbelievable. Obviously, it's been a very good product, and we love it. So if you want to check out the micros, I've got a couple of videos on that. But it's a great entry spot for somebody who's either afraid or never tried futures. You get to trade at 10% of what the actual contract value is, with also commissions reduced to 10%. So if you want to check it out, email me, bubba@bubbatrading.com. Don't forget about our high school program at Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Now let's get back to Bubba's Bottom Line with me, Todd Horowitz. Welcome back to Bubba's Bottom Line. And as every week, I like to give you a little thoughts of what I'm thinking. And, this week I've totally ignored the political scene, and I'm going to do it at the commentary too. How about that? No politics this week. I can't take it anymore. In the meantime, I do want to talk to you about trading, investing, and all the bull that is out there. Okay. I've been doing this obviously for 40 years, and I've seen every ad, every service, and everybody who promised you're going to make billions. Okay. And again, that's a crock of crap. Okay. There is no free lunch out there. There is nobody passing out $100 bills for you to take that easy money. Quit chasing the shiny object. Trading is hard. Okay. Trading takes patience. Trading takes time. Trading is a grind. Okay. So all those promises of free this, you'll make this amount of money, that amount of money. The world's coming to an end. The world's going to whatever it is, it's a bunch of bull. Okay. It means nothing. As I say, there is no free lunch. And again, one thing I've been watching is now there's a naked selling option service. Well, let me just remind you, for those of you who may forget, because we did address it here before it happened, optionsellers.com blew out all their investors. And just remember, when you're naked short something, you're obligated. So even if it goes deeper than the money you had, you will owe that money. Okay. So yes, options typically expire worthless. And most of the time you'll cash that ticket, but you always have that unlimited exposure. Okay. It happens all the time. Remember, in markets, the improbable happens once a week and the impossible happens once a month. So please, I urge you to understand that trading is hard. Okay. The best way to trade, if you learn how, is kind of what we do, is through a mechanical method. It's just laid out by algorithms. You're either long or short. But again, I'm telling you, I don't care whether you come with me or not. What I'm helping you will do is at least do your due diligence before you get involved with some promise. And remember, okay, if it looks like that stuff on the ground that your dog or cow left, okay, and it smells like it, it probably is it, okay? So if it looks too good to be true, it probably is, because again, ain't nobody handing out nothing for nothing, okay? So those gigantic, enormous promises are usually just that, false promises. Have a great week, everybody. We'll see you back tomorrow with Bubba's Daily Update. And in the meantime, have a great weekend. Enjoy the rest of your Sunday. And as always, I thank you so much for listening. We'll see you later.